session. Big tech leading the S&P 500 to a fresh record this week. But is there a regime change underway as we see some outperformance of small caps? Russell 2000 moving to the upside this week. We want to bring in Michael O'Rourke. He's JonesTrading Chief Market Strategist. And Michael, I think many investors out there are trying to figure out what exactly is ahead for small caps. We certainly have seen maybe a bit of renewed optimism, although maybe some of that poured some cold water on it. The fact that we don't know what the Fed is going to do next, or that there's so much debate about whether or not the Fed should move at the next meeting. What does this all ultimately mean for small caps?
Well, small caps have underperformed for a couple of years. And, we had this June CPI report released in mid-July where we saw inflation start to cool. So that was the first sign that, the interest rate environment was going to free up for these small cap names and that the Fed was likely going to pivot. Now we know the Fed has pivoted, they cut rates, but they also came out with an extremely dovish outlook, regardless of the fact that we have a pretty strong economy right now. Q3 GDP looks like it's going to be above 3%. So that all plays to the small cap rotation. Basically, in the high interest rate environment, you saw a lot of investors flock to the Mag 7 names because they had size and safety. And of course, they weren't impaired by the high interest rate environment. But now that we're in this new easing cycle, you're seeing that rally broaden out, and it's benefiting both small caps and mid caps, and also the other 493 names in the S&P 500.
Should even within small caps, investors be focusing in on profitability among those small caps and thinking about the difference between the S&P 600, for instance, versus the Russell 2000?
It's a fantastic question. Yes. The Russell 2000 is an index comprised to just represent the U.S. Small cap market, all stocks with, just certain criteria as far as size, whereas the S&P 600 is a little more selective, and things like profitability and measures like that come into play. So historically, the S&P 600 has generally outperformed the Russell 2000. So if you want profitability and key metrics like that, you go to the S&P 600. If you just want exposure to small caps, you'd buy the Russell 2000.
Michael, what do you think the road ahead looks like for big tech names for Mag 7? We've got Tesla set to report next week. We've seen the growth estimates at least lowered just a bit on a quarter-over-quarter basis. How worrisome is that to the overall market, or is it not?
Well, I think because we have this rotation going on, it's not as worrisome as it normally would be. Right now, collectively, the Mag 7 are trading north of 40 times earnings, or double the PE multiple of the other 493 names in the S&P 500. So obviously, valuations are expensive there, and the market has relied on them for the past 2 years to power the indexes forward. Now, if we're getting this broadening rally here, that the smaller names and in the S&P, or the other 493 names in the S&P 500 can actually support the index as those flows rotate into those names. So you can see a situation where even if we get underperformance from the mega cap names, that the S&P 500 itself holds up.
And so all these things considered, as we're mid earnings season, of course, there are going to be a lot of different fluctuations within the S&P as we get even more into the depth and the teeth of earnings season. What do you anticipate might be the theme that we see play out among those companies within the S&P 500 that are trying to say, okay, AI trade aside, we can still show profitability and we could still forecast growth in this near term?
Yeah, I mean, I think the challenge or the headwind for the mega cap names or the Mag 7 names is expectations are really high for these names. So, you guys were just talking about the banks, where that's a group that's underperformed in the high interest rate environment. So, and that's an area that's benefiting from this rotation now, because again, the Fed's easing cycle is going to benefit them. It's going to benefit the assets they have on their balance sheets that have been impaired, marked down, or have mark-to-market losses due to the high interest rate environment. It's going to help them from a funding standpoint, as far as deposits won't be fleeing. So I think that's you're looking for those groups in those sectors where tailwinds are starting to emerge. Whereas I do think with the big cap tech names and the mega cap leadership, there's just a lot of high expectations there, and they're great companies and they always tend to perform well. But again, it's just a very crowded group right now.
Michael O'Rourke of JonesTrading, thanks so much for taking the time here on this Friday, Michael. Appreciate it.
Thank you.